Hi, everyone. Welcome to our webinar today, Spring Cleaning for NAV Financial Experts. I know we've had a lot of interest. We want to get started right away. Just a couple of pieces of housekeeping, and then we'll jump right in. First of all, we always record our webinars, so you'll be able to find this recording later on this afternoon on our website, which is enovia.com. Secondly, if you have any questions, go ahead and type them into that question box. I'll get them called out and answered for you. So without further ado, Carrie, I will hand it right over to you.
Fantastic. Thank you very much, Abby. Welcome, everybody, to our webinar today on spring cleaning for NAV Financial Experts. Hopefully everybody's feeling a taste of spring already wherever you are in the world and seeing things warm up, maybe a little rain instead of snow. It's always a great time to reevaluate things, and today we'll talk about reevaluating some things in your system. First, I want to tell you a little bit about who I am. I'm Carrie Rosewald, and I'm a senior application consultant with Enovia. My email is there, as well as a link to my blog. You guys are welcome to reach out to me with questions that you might have related to the webinar today. I do regularly teach and train in the areas of finance related to NAV, so account schedules, dimensions, and budgets are kind of my pet topics, but many other things in the finance area are also of great interest to me, and I love to help other people so that they can really maximize their NAV solution in the finance area. So one thing that you might not know about me is that before I was a consultant, I was a customer. So, and since 2004 all the way up through 2014, I was a corporate controller, and I use NAV every day in my job, just like many of you guys have. So I've walked in your shoes, and I understand the kind of things that you're looking at with your businesses today. One of my annual traditions, and sometimes I do this at year end, sometimes I do this in the spring, it depends on when I had time, I would go through the process of reevaluating what was going on with NAV, what was going on with my processes, and really asking the questions of, are these things still efficient? Are they still working? And are they still relevant for my business? We all know that businesses change, and we start to do different things, and over the years, those different changes really accumulate into different needs for the businesses. So as I would go through that process, I kind of built a list of the things that I would want to take a look at every year, and even got to a point where I scheduled some of those things pretty regularly so that we could maintain our system. And that's the list that I'm going to be sharing with you today. So I've got 10 things that we're going to look at that you can look at in your system to make sure that your NAV financial processes are still efficient and still relevant for your businesses. So the first thing that I really would dig into is reports. So reports are one of those things where they can just easily get out of control, right? So we've got lots of them out there, and sometimes we've designed reports for maybe just a single use. Maybe we designed something and we started using it one way and ended up using it another way. Those things can really change pretty quickly. And it's really easy to lose track of who's using those reports and who's really not using those reports anymore. So really, the first question when you're evaluating reports is to find out if the reports are still used. So we may be spending a lot of time producing reports and distributing reports that people really aren't even looking at anymore. And of course, there's lots of different ways to be able to track who is using that. Sometimes just asking the question is effective. Sometimes it's not. You might not find the right person just by asking, and you might need to monitor how people are using those and when they're using those. I know that one thing that we did is we did distribute a lot of our reports on a SharePoint site, and we were able to see the statistics of who was going into those reports and reading them and downloading them and how often they were doing. So that was hugely useful because we'd go through our list of reports, and if there were things that were not used, they'd just go off the site. We would not continue to produce those things out there. But other than really how much they're being used and who is using it, the other thing is really, are those reports relevant, and do they need to be changed in any way? Can we organize or reorganize some of those reports? Can we expand on them just a little? Can we simplify them or contract them just a little bit? Really, when we look at what's on an individual report, we want to think about how can we tell a more clear story for our companies. So reports should be able to tell a story, and hopefully they're able to tell that story in a concise way. So if you're looking at a single page report that's presented in a way that's concise, that story is going to be very clear that the report is telling. So take a look at those reports. If you've got reports that are many, many pages and many, many columns and really just an extended spreadsheet on a report, there are things that you can do to reorganize that and make that tell a more clear story. So definitely look at those reports to see if they're comparable and consistent. Especially in the financial area, those two principles are important for us, especially when we talk with our auditors and our outside accountants and our stakeholders, so that for people who look at our story infrequently, when they look at last year's information and this year's information, where they can still see what the story is and how it compares to what it was last year. So that's why it's also important when we look at these reports, for some of them, that we really should only make small changes gradually, making sure that we walk through those in a gradual way so that we continue to tell the story in an improved way, but without changing a whole ton of things really quickly. So, and lastly, really looking to see if there are new reporting needs that the company has. Once you've gone through the exercise of evaluating what you have, you'll think back to those conversations that you had earlier in the year, where people asked for something slightly different or maybe even wildly different. And either you were able to honor that request or not honor that request. Now, when we're reevaluating the reports, is an excellent time to be able to look at those again and see if those new reporting needs really make sense with the strategy that we're executing for the reports that we produce. So that's our first area. The second thing is getting into a little more detail now. Evaluate your general ledger accounts. So we all have a chart of accounts in our Dynamics NAV solution, and many chart of accounts are simple and many of them are not simple. And for every single one, no matter what the complexity of the chart of accounts, we can evaluate a few things to make the activity that we do going forward easier. Ultimately, the goal that you should really have in mind when you think about the chart of accounts is how can you decrease the size of that chart of accounts? So we have many tools available to us, including things like dimensions, that make it possible for us to have a very small chart of accounts when we use Microsoft Dynamics NAV. And on top of leveraging tools like dimensions, we also can just manage what's there as it is. So if we look through our chart of accounts, start with your income statement. Take a look at that income statement and see if there's accounts that are no longer being used or maybe are not being used very much. If we're seeing very few transactions or no transactions going into those accounts, you could probably block those accounts and remove those from your financial reporting or roll them up into other areas so that you do not continue to use accounts that have very little activity going on in them. Same thing applies to your balance sheet. If you're looking at balance sheet accounts and you're walking through those reconciliations, you're always going to find that one reconciliation where you say, why are we still reconciling this? There's this one thing hanging out in there, or these other things really belong with those other things. Now's the time to decide if something needs to be blocked or maybe combined with something else for the purpose of decreasing the size of your chart of accounts. Related to dimensions, taking a look at your dimension controls is pretty important too. If you haven't used dimension controls from the chart of accounts before, now would be a great time to put those into place. Really what you want to do is, if you're using dimensions from your chart of accounts, for any account where a dimension is required, you should add a dimension requirement by looking at the dimension value for that account and saying, for this dimension, say team, I'm going to put code mandatory and leave the value blank. So that would mean for that account that whenever somebody posted to that account, they would have to provide a team dimension. It really acts kind of like a traffic cop for your chart of accounts to say, if anything tries to come through here and it doesn't have the proper dimension, I'm going to stop you until you do. So great control to be using along with dimensions that are coming from other areas. The last thing to check for is if you've added any accounts for the year, make sure they're connected to your reporting. Some areas like the NAV canned trial balance are dynamic and they will pick up new accounts that are added, but other areas like account schedules need to have that account added if it's not included in a named range. So important to see if you had any accounts that have been added to make sure that they're connected to your reporting, and that goes for outside reporting sources as well. The next area to take a look at, journal entries. So we use journal entries quite frequently, and sometimes we use them well and sometimes we could use them better. I always ask people to reevaluate how much they're doing with general journals to see if there's anything else they can be doing where they use recurring journals instead. So anytime where you're making a journal entry, where you're doing it more than once, where you're doing it regularly, that's a great candidate to start using recurring journals instead. Recurring journals can store the information that you have created one time and allow you to replicate it the next time. So really, you only have to type that journal once, and the next time you can go in and change the amounts only and record it the exact same way. So think about those general journals and make sure that those journals that are being created are only used for unique journals, for corrections or reclassifications that you're not going to use again. And all of your other journals should be set up as a recurring journal. You can also start to use your recurring journals once you really get into it as a checklist for your month-end close. If you've got all of your regular journal entries out there set up as recurring journals, you can look through that list each month and see if those things have been posted for the month or not, and use that as a way to monitor whether journals have been posted for the month. So, and it's quick and easy just to click through them and see if they've advanced to the next month to make sure that you haven't forgotten to post one of those through. I know some people even go as far as to provide this checklist to their auditors to say, yep, this is how we control our month end, and here are the journal entries that we do, and here's how we monitor it. Definitely take advantage of that reversing option for recurring journals. If you have accruals that need to reverse on the next day of the month or at all, that reversing option is much easier than typing the reversing lines into a journal. And think about the fixed and variable components of a recurring journal. When you look at recurring journals, if you choose to use a fixed amount, NAV will keep the numbers that you've put in the journal that month, and the next month those same numbers will be shown to you as a choice to use. You can always change them if you need to, but you don't have to retype or redo those things with something that you anticipate should be the same month to month. If we're looking at a variable option, this might be for something like your payroll journal that does change every month, and you would choose to, with variable, populate it the first month. When it presents it to you the next month for review, all of those values will be set to 0, and you'll need to re-enter those. So it kind of reminds you that you need to put those things in instead of having to type over something else. The other thing that you can take a look at is, are the descriptions that you're putting in your journal entries consistent? So we can often use descriptions in a journal entry as a guidepost for what is showing up in an account when we're doing our reconciling activity. So if you're digging into those accounts when you're doing your reconciliations and you're using the descriptions from the recurring journals to help you to sort through that data, it's just another fast way to be able to analyze things. If you're doing general journals, you probably won't get that consistency because NAV doesn't hang on to that information. So it's just another good reason for using recurring journals, because you can get those consistent descriptions so that you can recognize transactions that are regular and monthly when you look at your general ledger entry detail. The next place to look is our number series. A lot of times we don't evaluate our number series, or we don't re-evaluate our number series, right? We look at number series kind of as a setup option when we set up our system for the first time, but I think this is a good candidate for re-evaluation when you're doing your spring cleaning. So oftentimes we make choices for our number series that make us work too hard. And I view number series as one of the tools in NAV that allows NAV to do the work instead of having our employees and staff do the work. Okay, so think about those manual numbers that you have set up and really ask the question about whether they need to be a manual number series. In some cases, they do, like item number is a good example for some folks where they need to have that item number match a catalog number that comes from somebody else or something like that. So that's a good example of something that should be manual. But there are a lot of other not good reasons to have a manual number series, and especially when you think about those number series, if you've got a lot of logic behind that number, oftentimes it's because you can't figure out where else in NAV you can get that information. So spend a little time to figure out where else in NAV that information might be so it doesn't have to be maintained in the number series, because when you're using number series from NAV, if you can have NAV automatically give you that number series on whatever it is you're doing, you're not only going to save time, but you're going to have more accurate results with what comes through, with fewer conflicts. So, but there are some other things that you can look at other than just replacing manual number series. You can make sure that everything is set up so that you don't allow duplication. Now, NAV won't let you put in duplicate numbers in most of the areas of NAV, but you can also control some of those number series to make sure that you're avoiding part of a number series that you've used previously. If you need a little extra help with that, you can use the warning number. So let's say I had somebody who had some invoice numbers that got out of order with their other system, like they had a skip in their series, and they wanted to go back to where they left off and use those up, but then skip over those so they could not have duplicates from their older system. So we set a warning number that let us know about 50 numbers before they hit that series that they wanted to skip. And then we took the opportunity to advance the numbers past that and then continue on. So that warning number helped us to know that without having to go in there and watch it all the time. So checking the ranges on your number series to make sure they're large enough to last you for the whole year. This is really just something that you can do so that you can plan on looking at this once a year instead of needing to monitor it periodically. If you've got your number series set large enough, then you don't have to think about it. And you can also take the opportunity to look at, how many invoices have we created this year versus last year? How many credit memos did we create this year than last year? What's the reason for a big increase or a big decrease in some of those types? Gives you a chance to evaluate that kind of stuff that may give you some indicators to the activity that's going on in your organization. So some people will set a unique number series on things like journal entries for the new year, so that you could say, this general ledger accountant is posting these journals for this year. So I could put my initials, I could put KR 2016 in that number series and set that up automatically. So the first journal entry I post for the year would be, number 1 through number 300 at the end of the year. And it would be a way to track some of that kind of stuff. I've seen people do that where they've had quite a few people in their department all working together, but they wanted to be able to easily track what each person did versus the other. So setting a unique number series on their journals was the way that they did that, not only for the employee, but also to designate the year. Excuse me. The final thing to look at with number series is looking at posting number series instead of a number series. When you look at your journal batches, you have the option of setting one versus the other. And oftentimes using a posting number series is a great way to create some automation, because you can put in a placeholder like the letter X and put that in the document number instead. And when it posts, that particular journal will reference the posting number series and replace the placeholder instead of you needing to maintain that. All right. So the next thing that we'll take a look at, this is kind of a small but mighty feature. I hope that everybody's using this, but if you don't know about it, it's a nice little time saver. So on all of the general ledger accounts, there's a little box called the reconciliation account checkbox. And when you have that box checked and you run a test report on anything that you're running before you're posting, NAV will put a little reconciliation at the bottom of your test report that shows what the general ledger effect is going to be of those transactions. So in particular with journal entries, this is useful because if you're in doubt or if you're in a rush or if you're interrupted, you could take a look at that on the test report and just take one more look at it to make sure that you're posting the general journal in the correct direction. So this particular feature has saved me from making more than one backward journal entry, which not only are embarrassing but are also annoying. And it's just a good last double check to look at the effect that you have there on your general ledger accounts. You have to keep in mind that if you're using this on accounts that are high volume, like I don't know, something just has lots of transactions in it, it's going to show you the balance of whatever that count is today, whatever today is. So not so useful in some of those cases, but if you're using it, say on some of your balance sheet accounts where really you're the only person affecting that account, hugely useful because it's showing you the balance, it's showing you what the activity is going to be and where it's going to end up. So nice way to double check. One of the cool new features that we're seeing in NAV 2016 is the posting preview. This is different from the test report, and what it really does is it pre-produces the results that you see in the navigate box for something before you post it. So not only can you see the journal entries, so the debits and credits, but you can also see the ledger effects for everything. And the only thing that you don't see on there, of course, is document number because it hasn't been created because it hasn't been posted yet. So very cool feature in 2016 that's allowing us to do that kind of preview. But if you're not on 2016 yet, just use that reconciliation account checkbox and run the test report to get a good view of that kind of thing. So master data. This is something that we can spend a lot of time on or sometimes not any time at all maintaining. And the question is which balance is good for your company? I found that doing some small amount of maintenance on my master records every year really paid off in the end. Not only did it just continually maintain those records and give us a routine to adhere to and some deadlines to say, yeah, we need to make sure that all email addresses are filled in by May 1st, because that's what we do. But it also set some expectations. One of the things that we would do is we'd evaluate those customers and vendors to see if they were still active. If we had somebody that had not made a purchase in 2 years, we would block those vendors or those customers, whichever is appropriate. They'd still be in our system. We'd still have their information. We'd still have their contacts, but they would be blocked for activity. And that would trigger a couple of things that became really important. The first thing is it did allow us to filter against that, so we only looked against active customers and vendors in our lists, which for our company was important because we had many, many records. But the other thing that it did is when that customer or vendor would show up again, there would be some activity to say, oh, that person is blocked, and do we need to gather new information from them? Is there a new contact at the company? Has there been any type of change? Do we need to have a little more detailed discussion with them about whatever sale is occurring? So knowing that that blocked customer or vendor would be reactivated kind of prompted that activity to happen to renew that relationship at that time. So certainly looking at information to see if it's complete. Hopefully we're all perfect in gathering all of the information we need all the time, but in reality we're not. That's quite a lot of work to maintain, and a little bit of monitoring and review of that goes a long way to make sure that we can go back and update some of that information. And ultimately checking to see if those contacts are still current so that we know that we can get a hold of the right people when we need to is an important part of that review. So something related to customers as well as to vendors is payment terms. So when we look at our customer and our vendor records and we evaluate some of those things, payment terms is actually something that's worth spending a good amount of time on. So if we know that payment terms are correct, then our system should suggest things to be paid when we expect them to be paid. Okay? So if you are running your accounts payable payment run, you're doing your suggest vendor payments, and things are not coming up as due for when you think they should be coming up, that's a great time to take a look at your payment terms. So that probably means that either the payment terms are outdated or wrong, or maybe the agreement has changed. Something is different with what's been happening with those payment terms. And taking a look at getting those more accurate will allow you to rely on exactly what you're looking at when you do your payment run. So go through those records and look particularly for payment terms that are odd, things that might not actually be being used. Look to see, does your company have kind of a convention that's in place where you really want everybody to be net 15? And how many of those customers or vendors are not in compliance with that, and why is that? So figure out if those payment terms need to be adjusted. Really evaluate whether those payment terms fit the reality of your relationship with those particular customers or vendors. Oftentimes we might have a stock payment term in there, but we might have some kind of special circumstance or agreement or contract that makes those payment terms different, and we might need to make that accurate in our system in order to pay things more accurately. So I know that when we look at accounts payable and whether things are coming out correctly, this is a huge factor in making sure that we can trust what's going on, and it's a big place where we spend time when we make our payments or when we look at collection efforts. We spend a ton of time sometimes downloading a lot of this stuff into Excel and evaluating it outside of the system in order to decide what we really need to do. And if you're engaging in that kind of activity, going through a review of your payment terms and then going through the exercise of following those through the payment cycle to see if they're coming out in a way that you can trust them is really a worthwhile exercise. I did this myself a couple of years ago, more than a couple of years ago now, and over a year's time we were completely able to change our process and completely able to change who the people were who approved these things, because everybody knew that they could finally trust the system because we had things set up correctly, and we didn't need a whole lot of complex oversight and analysis to be doing this, because NAV could do the job as long as it had the right data to do the job. The other thing that this helped with is this really helped with our cash flow. So we were doing a lot to forecast cash flow and trying to use a lot of that manual calculation to figure that out and trying to second guess what was going on. Once we were able to get those payment terms working in a way that we trusted, monitoring our cash flow was much easier, and making some other changes in our processes, including paying things electronically instead of with checks, made a huge difference because it allowed us on the payable side to hang on to our cash for longer. So we were able to literally send it out the door at the last minute when it was due, instead of having any lead time at all. So great way to create some improvements with just one piece of data. So evaluation of your processes. This is also a key activity to really dig into. And this can apply to a lot of things. I would encourage you to bring it back to your NAV processes, but start checking through that list of things that you have when you look at your sales cycle, when you look at your purchase cycle, when you carry that stuff through to accounts receivable and accounts payable. How are those things operating? How long does it take for a single document to get through your system from the front to the end? How many touches does it have? How many evaluation or approval processes does that process have in place? And ultimately, when you look at those factors, when you look at how much time, how many people touch it, and how many approvals are in place, you can really ask the question of whether that process is still effective. And looking at those things and breaking them down by cycle is a great way to figure out if there is opportunity for change that would create some efficiency. So for sure we all end up in the trap of we've always done it that way. At some point, that answer becomes the answer to, well, why do we do it this way? Because that's really the answer. Nobody knows why anymore. So take time to really question everything. The benefits that you have to reevaluating some of these processes are huge, and we often don't think about what the downstream effect is of when we evaluate these different kinds of processes. So the example I can give you really is thinking about how the timing of processes makes a big difference in what happens downstream. So one of the things that we as different companies think about quite often is, can I get reports that tell me how I did quick enough in order to change the behavior so that it makes a difference in the results? Okay, so we need to have our reports within a certain time frame in order for them to be effective. If, and this burden falls on the financial department in particular, if it's taking us the whole month to close the month and get those results to our stakeholders, that's too long, because they're not finding out how they did in February, for example, until the end of March, and then they can't do anything in March to change that behavior because March is already passed. So it becomes an almost impossible loop to affect change in those areas of our business because we're delivering reports too late. So if you don't understand why it's important to provide financial reporting as early as possible, that's really the primary reason why. So what do we do then? We focus on shortening the month-end close. And how can we get the month-end closed in fewer days? How could we get the month-end close in 2 weeks? And how can we get it down to 1 week? And how can we get it down to 2 days? Because then not only can we react to what's happened with those reports, but then our financial experts in the company can be working on other things other than closing the month, right? We want to have our financial experts spend time doing analysis and helping to build other types of projects and create improvements within our company. So if we're looking at how we can shorten the month, that's absolutely a worthwhile activity, and evaluating processes is the way that we get there. Often the timing of processes is what makes a difference here. Things we've already talked about, like creating efficiency and using recurring journals instead of general journals, is one way. But when we do those journals is also another thing. So if your accounting department has their month-end close list and they do all of the journals on days 3 and 4 of month-end close, because that's when we do all of the journals, think about that for just a second. Some of those journals you might be waiting for information. Accruals are a good example of that. You need to have your accounts payable information as final as you can get to decide what that accrual is. So you need to wait for that one. But what about the rest of them? What about the other entries that we're making? Do we have to wait until day 3 or 4 or week 3 or 4 in some cases to make that journal entry? Could we make those entries for the next month in the 3rd week of the prior month? So those entries are done so that that action is completed before we enter the month-end close process. Okay, so think about how you can change the timing of how that is done. Do you have the information that you need to make that journal entry before you start working on the month-end close process? Can you do it ahead of time? The more you ask that question related to all sorts of things in your month-end close, the more you'll find that you can pull back to be done earlier in the month instead of at the month-end close. So there's lots of ways that you can do that when you look at those different processes, and specifically looking at timing with the specific intention of shortening the month end is one way to really get there and a great way to focus on it. All right, so making the role center your own. So for those of us who are using the role-tailored client, and I hope that that's a majority of us at this point, so I realize that it is not in many cases, that some of us are still using versions of NAV prior to the role center. For you guys, pay attention to this, because when you upgrade, when you move, this is something that you should incorporate into the plan that you have when you make that upgrade. The Role Center is uniquely designed for efficiency and simplicity. And the Role Center should allow you to really simplify what's going on for each and every user who uses NAV in your company. So the number one thing that I see with the Role Center is that people keep the out-of-the-box configuration and they don't change it. And I don't mean they don't pay their partner to customize it. I mean that they don't go through the personalization that they can do themselves in order to make their Role Center their own. So there are lots of things that you can do yourself, each end user, to be able to make the Role Center their own and to instantly create efficiency in what you have. So think about these few things. When you think about what's on the ribbon at the top of your page, if you've kept the out-of-the-box NAV configuration for your Role Center, there are probably a lot of actions on that ribbon that you don't use. So if there are things on the ribbon that you don't use, take some time to get rid of them. Remove them from the ribbon. If you go a little too far and you take too much stuff off, you can always put things back on, or you can always go back to your default settings and put everything back the way it was. So people don't need to be afraid to experiment and to play with this a little bit and to try what different things might look like. So take things off the ribbon. The next thing I'll tell you is put things back on the ribbon. All right? You can put any type of report or any type of action on the ribbon. And one of the best ways to do this is if you go into NAV and you find that report or action and you realize it's something you do regularly and it's not on your ribbon, right on the spot, put it on the ribbon where you can reach it, where it's useful to you. So take some time to look at not only what you have going on your main Role Center, but on the other ribbons that you have in other pages. And really get that down to the bare bones of what you do. Simplify as much as possible. Keep in mind that if you don't have things on your Role Center, it doesn't necessarily mean you don't have permission to it. You may not have permission on it depending on what your role is with the company, but if there's something that's not on your ribbon, if you can find it and add it to your ribbon and check it to see if you can go in there, if you're not restricted by your permissions, absolutely add that to the Role Center because that's something that helps you get your job done. Think about the report tabs that are on those ribbons. A lot of times we have many reports that show up on there, just like we talked about earlier with spring cleaning and evaluating which reports we produce for other people and which reports we've designed and which ones are being used. Think about the reports that you're using. How many of those little icons do you have on your reports tab, and are you still using those? Have some of them become more important than they used to be? If so, move them to spots where you can get to them easily. But definitely clean up what you're using for reports from your Role Center. When we think about other parts of the Role Center and we look at what we have on the left-hand side of our Role Center with our navigation pane, we've got the opportunity to get to lots of different list places from here, including having filtered list places. So we can create saved views from our customer list or our vendor list or item list to replace filtering that we would normally do out there. So if you're regularly going to one of those lists and filtering by the same thing, so I need to go see what's going on with my warehouse in Milwaukee, and I need to see what's happening with the location in Madison. If you're constantly filtering by those two different things, then set yourself a saved view for those so that you can go to that directly from your Role Center without having to reset the filter every time. Question, anytime you're using repeated filtering, could I be using a saved view for this so that I don't need to do it more than once? You can also get a little more consistent with that way because you can refine it that one time, save it, and it'll always be that way the next time you go back to look at that saved view. Another thing that I think in particular for finance folks is pretty effective is adding a favorites menu or a month-end menu and putting all of the spots that you go to related to month-end on that menu. It's a good memory trigger to be able to go into that menu and say, okay, so now I'm going to run the aging for this, and I'm going to check the recurring journals for that, and I'm going to take a look at my adjust cost here and kind of walk through those different processes from what you have on the menu. So just a nice little reminder system right there on your role center. Taking a look at fast tabs and fact boxes, we've got fact boxes off to the right all over the place, and we've got fast tabs in between each section in some of the newer versions of NAV. Some of those fact boxes we use and we rely on them a great deal. Some of them we don't. If you're not relying on the information in those fact boxes, either remove them or reduce them. Get them out of the way. Even when you look at an individual fact box, if there are fields that you're really not monitoring, you can go in and remove those fields so that you're only looking at that information. The fast tabs even get more exciting when you think about the things that you could do with those. You can change the order that your fast tabs appear in. I was just talking with somebody the other day who really needed to enter a bill to and ship to customer uniquely each time for an invoice, and they always had to skip over the lines section of their sales order. So we just had to move the lines section up so that they could go through section 1, section 2, and then to the lines. And that's exactly what they needed to be able to do. So think about moving those fast tabs around and using them in a different way. So this is how sometimes making the role center your own can affect your process and how well you're working on some of that. And then don't forget that you can promote data onto those fast tabs. When you roll up those fast tabs, when you collapse them, and you see data that's showing in there, that's because those data fields have been designated as promoted. So if you go to customize your page and look at those fast tabs, you can pick data to be promoted on there. I'm seeing people using this more and more, and often when I go to a customer site, I see people using their page with all of the fact boxes rolled up. All I see is gray bars with data in them. And those people are familiar enough with that data that they're not needing to open it and look at all the other stuff that's necessary for setup. That stuff has to go in there one time, but for their regular use of the system, they know which data is showing in which order on their fast tabs and can use that as really super quick reference to be able to see what they need on their screen in a condensed way. So then the final thing that I'll urge you to do with your role centers is take a look at how much left to right scrolling you're doing. So because when NAV comes out of the box, Microsoft suggests many, many columns on every screen, it's a pretty natural action for people to be doing a lot of left to right scrolling, simply because they have so many columns showing. In a majority of cases, I would say that's not necessary. Just like when we look at the ribbon, when we look at what we see on those forms and we look at all those columns, there are probably half of those columns that you really aren't using at all. So when you move through your page, if you think about what you're doing, you're scrolling up and down to get more real estate for your lines, but you're also going left to right to get through those lines. It's a lot of back and forth and a lot of movement on that screen. When if you could condense those, remove those columns so that you're only moving up and down, you'd save a ton of time in processing that particular page with whatever you're doing there. And that's whether you're looking up information or whether you're entering information, whatever your task is, if you can arrange your screen so that you're only scrolling up and down and not also going left to right, that's a great time saver. Another way to think about that is not only remove those columns that you're not using, but for any columns where you are entering data, move those to the far left and put them in the order that you're entering that data. So if you're entering for an order, you're going to designate your item type, your item number, and your quantity, and boom, everything's populated. Okay, you might have a few other things. You might have some dimensions to add. You might have a tax code to add. So put all those things on the left-hand side so that you only have to enter those few. And then anything off to the right should be something that you need to see to visually verify that the information that you put in the left was what you needed. Okay, but really strive to get that left to right scrolling to go away. You can always add a freeze pane, but that actually makes the situation worse for a lot of times, because then we reduce the amount of space we have and spend more time scrolling. So be careful with using the freeze pane, because sometimes it doesn't always solve that problem, and actually figuring out how to eliminate things we don't really need is more effective. All right. So out of all the things that I look at, this is not necessarily the last thing, but it's one of the things that I look at when I evaluate my system for that spring cleaning. After you've gone through all of these different points to take a look at your system, you're going to see where you have some deficiencies, where you need to learn something more, or specifically where learning more about that area might increase your utilization of the system, might increase your efficiency, and ultimately save your company money, because you could do it yourself because you know about it. So really take some time to gather all of the things that you've learned from these other points when you evaluate for the year. And think about where you need some training, where other people need some training, and document not only what that training need is, but how it's going to benefit the company in some way, so that you're prepared for that conversation with whoever might need to approve that, to say, yes, this is the training plan that we have for the year, and these are the benefits that we believe we will have by investing in this. So hopefully that's a value that your company has in place, and you'll be able to take advantage of that. Don't stop there. Go to that training, come back and apply it to the situation that you wanted training for in the beginning, and once you've applied that, document what the improvement was. Because we had this training, we were able to improve this process, and we were able to save the company this much money. Or because we did this training, we were able to reduce the time that it took to produce financial reports by 4 days in our monthly process. So documentation of that thought that started out as a kernel of, man, we need to know more about this, really is the thing that you need to do to close the loop. And that's hard, because that actually carries this through over a pretty long time frame. But making that kind of investment in your training investment is what's going to allow you to go back next year and say, all right, so last year we accomplished these 3 things because we invested more in training, and we learned more, and we saved the company money. So this year we're going to tackle these other projects and do the same thing, and your company already knows that they can rely on you to bring those benefits back to your company because you received that training. So that's my 10 points. So, and really this is based upon my experience as a controller using NAV and some of the things that I would evaluate every year for my company and for my department as we use NAV. So I'll open things up for questions.
Carrie, we don't have any questions at this point. I just want to remind everybody that if you have any questions, type them into that question box so we can get them answered for you. It must have been so clear, Carrie, we don't even have any questions.
I hear you. It's a lot of information, and not every single thing is going to be useful to everybody, but as long as you got a couple of nuggets out there that you can take home and use, I am pleased as punch. So very glad to have people taking in this information and hopefully taking some of that back to their companies.
Well, Carrie, thank you so much. And of course, to our attendees, we want to thank you so much for coming today. Just a reminder that we recorded this webinar and we're going to put it up on our website, which is inovia.com. And we hope to see you all at our next webinar.